Welcome back to the Daily Defiant. I'm Jack, and today we're making sense of why the markets seem to be moving up while Binance continues to bleed assets. A big thank you to today's sponsor, Singularity DAO, who's providing decentralized crypto management tools to maximize your alpha. More on them later. So what is going on at Binance? Binance, as we know, is the world's largest crypto exchange by far, controlling an astonishing 92% of trading volumes at the end of 2022. Yet, their cash outflows and levels of trust seem to be far worse than the CEO CZ let on last month. And according to Forbes, the situation at the exchange is deteriorating. On the other hand, markets are generally having a good week, world stocks rallied, and even oil prices rose on some economic optimism after China reopened its borders. Goldman Sachs also delivered some hopium as they said today that they no longer expect a recession in the Eurozone. They've since updated their projections from the previous 0.1% contraction to a growth of 0.6%. Closer to home in the realm of digital assets, we reported that Sol soared about 36% last week as the meme coin Bonk became 2023's first hit. The head of strategy at the Solana Foundation, Austin Federa, told us last week that people were simply having fun with Bonk and that there hasn't been a lot of fun in crypto in the last few months. And he's spot on, particularly considering the trust issues Binance has been facing since the FTX saga. And before we dive into the trust problem at Binance, a quick word from our sponsor. Singularity DAO is a decentralized portfolio optimization solution. Their Dynasets, non-custodial tokenized vaults containing crypto tokens paired with stablecoins, use quantitative trading strategies and market signals generated by advanced artificial intelligence. Current Dynasets, which run on Ethereum, named DynBTC and DynETH, have outperformed the market consistently for the last 9 months. On January 9th, the first Dynaset opened on BNB chain, offering participants exposure to an optimized vault of Layer 1 blockchain tokens, including wrapped Cardano, Ethereum, XRP, Bitcoin, BNB, and others. Contributions to this new Dynaset, called DynL1BNB, close on January 16th. Make sure to go take a look before then at not only one of the best performing asset management solutions, but also one of the only ones that leave you with full control of your assets at all times. Now back to Binance, and let's start by following the money. Investors appear to be in a hurry to remove assets from exchanges like Binance, since trust has been eroded significantly in light of the FTX saga, and the outflows are accelerating. According to DeFi Llama, Binance customers withdrew $360 million on Friday alone. But if we zoom out further and we look at the situation since November, we see a 24% decline in net assets. And the world's largest crypto exchange losing a quarter of its assets is a big deal, even when factoring in the year-long decline in digital assets as a whole. Binance's native token BNB has also come under scrutiny, and there's been considerable controversy since the auditing firm Mazars chose to stop auditing CZ's Binance and shuttered its crypto audit business altogether. Since the SEC's ruling that FTT was a security, there's also speculation around BNB and other centralized exchange tokens in terms of whether or not they represent a genuine asset that can meet external obligations in times of distress. But in all fairness to Binance, in a move that contradicts their usual habit of not disclosing any sensitive information, they did issue a public transparency statement around 2 months ago listing select crypto holdings. The statement included $17 billion in BNB, which at the time represented nearly a quarter of its assets. And that brings us to stablecoin news. You'll recall Binance announced in September that it would swap stablecoins such as USDT and USDC into its native BUSD. Now, there was a lot of speculation and negative community feedback following that announcement. So much so that the head of product at Binance, Mayur Kamat, had to release a statement announcing that the BUSD swaps were not just a marketing ploy, and that Binance did not believe other stablecoins were inferior. In fact, Circle's CEO even tweeted his support for Binance's new policy. But since trust in centralized exchanges has taken a serious downturn following the FTX contagion, the number of BUSD tokens has also fallen by about 40% between November and today. So one or more large investors or whales appear to have swapped significant BUSD holdings right back into rival stablecoins USDT and USDC, as we can see in this graph taken from DeFi Llama. And the stablecoin drama isn't limited to Binance. CoinDesk reported last week that Huobi Exchange fired around 20% of their employees and asked the remaining workforce to accept payment in USDC and USDT. Huobi then saw outflows of around $64 million in the 24-hour window surrounding that headline. But if we zoom out again, we see Huobi's market share dropped from 22% in 2020 to a mere 4% last year. They struggled to compete with Binance and the growing decentralized exchange market share. And more recently, solvency fears have mounted at Huobi in the past week. Justin Sun, the founder of Tron, who sits on the board of Huobi, said that a structural adjustment would be completed by the end of Q1 2023. Tron's price sank 8% as well. Arkham Research tracked Sun's ledger movement and concluded that he may have lost institutional banking relationships. In response, Sun tweeted that the key to success is to ignore FUD and keep building. We're going to continue updating you on all of the most important centralized and decentralized exchange news in the coming weeks. So click on that notifications button and stay up to date. But getting back to crypto markets as a whole, neither the outflows nor the loss of institutional support for any given exchange token appears limited to a single exchange. The bottom line really is that support for centralized exchanges is diminishing by the day. Director of Data and Analytics at Forbes speculated that this soft bank run on Binance could continue. As always, if you're not actively trading your tokens, we recommend taking custody of your own assets and making use of cold wallets. So thank you for stopping by. See you in tomorrow's Daily Defiant.